Hello everyone, good morning and welcome to today's last session of Audit and Assurance. So today we're going to solve the mock. And why is mock practice so important? Why do I insist on doing at least 2 to 3 mocks before the exam? The reason being, when you take a mock, when you pick a mock and try to do it yourself, you understand if you can write it, if you can type it properly, and it gives you a confidence in the examination. So that is why doing a mock is extremely important. Okay, so now we're going to do a mock. Let's see how many questions time permits, but we are going to try our best. Now, in the mock questions that are provided on the ACCA Study Hub, we do not have objectives. That is, we do not have MCQs. But that's okay. We'll do the big questions because MCQs are very theoretical. If you know the theory well, you just have to take the right answer and solve it. So let's begin with that. So this is your study hub. Then you select your subject. You click on the plus, okay. Then you click on ACCA official resources and you go to ACCA past exam library. In the past exam library, you have multiple papers available. So you have these many, plus in the practice exams, you have these many. This is a pre-December 2023 mock exam. And this is a specimen paper. So these many questions are there. So I will select the latest one, this one. So I will assign it to myself. The moment I assign it, it will come here. Okay, so this is the March-June 2021. I will resume it. Okay, the moment I click on it, this is how it will appear. Okay, this is the exam. Now on the first day, if you remember, we had tried to access the mock. So that time there are instructions, then page 1, page 2, page 3. So that is all done. That is why here the instructions don't appear. Okay, now this is the scenario, this is the question. And these are the requirements. You have to type the answer here. Now you can adjust it like this or like this. So we'll keep it equal. Okay, so that we can read the question also and answer also. So for every requirement, you have already the tables drawn and all. And if it is not drawn, you can draw it from here. See table and you can draw it from here. Now, if I directly want to start with some different question, then I will go to navigate and I will navigate the questions from here. Okay. So let's do this one. First read the requirement and then read the question. So if you do next, this is requirement B. We had tried to solve it, if you remember, on the first day. So I will just cancel that. Okay. So let's start from here. Now, as I told you, the requirements are of two categories. One which is dependent of the question and one which is independent of the question. So explanation of the different methods of documenting and their disadvantages is something which is not related to the question. It is something that you should know from your prior knowledge. So let's solve the first part and get done with it. So what is the explanation of narrative notes? It's a written description of the system. So narrative notes consist of a written description of the internal control system they detail what occurs in the system at each stage, including related controls which operate at each stage. Okay, this is the explanation of narrative notes. And what is the disadvantage of narrative notes? You are literally making a written description of the entire system. You're just going on writing 15 pages, 20 pages, 25 pages. So it is very, very time consuming. So they may prove to be time consuming and cumbersome. That is very complicated to understand if the internal control system is complex. Okay. Then the next method, internal control questionnaire. So here they have specified it's an internal control questionnaire and not an evaluation questionnaire. So what is an internal control questionnaire? List of questions given to the company and they have to tick yes or no. So internal control questionnaire contain a list of questions for each major transaction okay. They use questions designed to assess whether internal controls exist, because they're asking the company that do you have this control, do you have this control. So whether internal controls exist. Okay. Now what is the disadvantage of internal control questionnaire? When you're asking the company that do you have this control, do you have this control, they can simply say yes when they don't have the controls, because nobody is going to check. You're just having a questionnaire. Like when you're filling a review form, sometimes you're bored, so you write anything you want. So like that. So internal controls may be overstated if client is aware that the auditor is looking for a particular answer. Okay, and these questions contain standard questions. So they miss out on the specialized questions. So unusual controls may not be included on a standard questionnaire and hence may not be identified. Okay, so this is the explanation and disadvantage. I answered it without even reading the question, so because this was an independent requirement. Now going to requirement 2. Next, this is the requirement B for 8 marks. For this, I have to read the question. So let's first read the requirement. Identify and explain 4 key controls in Castle Courier Company's payroll system which the auditor may seek to place reliance on, and describe a test of control the auditor should perform to assess if each of these key controls is operating effectively. So 4 controls and 4 test of controls, 8 marks. Okay, key controls and test of controls. Now let's read the question. And it's the key controls in the payroll system. So you have to read the entire payroll paragraph. So first let's read the question. It is 1 July 2005. You are an audit supervisor of Apple and Company and are in the process of reviewing extracts of the system documentation which has been completed on the payroll cycle of Castle Courier Company, as well as preparing the audit programs for the forthcoming final audit for the year ending 30th September 2005. Castle Courier Company is a package delivery company which operates from a large distribution center. Then the payroll. The company employs 200 staff, of whom 120 of these staff are delivery drivers. All staff work a standard 8-hour shift each day and are paid monthly. All staff members are required to clock in and out using a sequentially numbered key card which contains their unique employee number and name. Sequence checks on the key cards and the data recorded in the clocking in system are carried out by the HR supervisor on a regular basis. The clocking in process is monitored by a camera on entry to the distribution center, and weekly checks are carried out by the HR department, who review the video footage to ensure that no staff member clocks in for someone else. This is a very good control, yes. Recordings are kept in date order in the HR department and logged on a spreadsheet together with the name of the person who has reviewed the footage. The clocking in system is directly linked to the payroll system, and information regarding the hours worked by the staff is automatically transferred into the payroll system. Great, because then nobody can play around with the data and nobody can fiddle with the data. The payroll system then automatically calculates the gross pay, deductions and net pay. The payroll clerk confirms that the transfer of hours and calculation has been done correctly by recalculating a sample of employees' gross to net pay, which is a very good control. That is, they are not only relying on the machine, but they are doing it manually for a sample of people and checking if the system is calculating the pay properly. A payroll supervisor then reviews this check, which is evidenced by a signature. So when a signature is evidenced, tomorrow if there is any problem in that, we can see whose signature is there and go and ask that particular payroll supervisor. All staff are entitled to 22 days holiday a year. Employees are paid for any holiday which has not been taken at the end of the year. Department managers are required to approve all holiday requests by authorizing employees' holiday forms. However, this does not always occur. The payroll system is password protected, and the password is changed on a monthly basis by the payroll manager using a random password generator. Once the payroll has been agreed by the payroll supervisor, the payroll clerk provides details of the net pay due to each employee to the financial controller, which then prepares and authorizes the bank transfer to be paid to the employees' bank accounts. Each month, as a part of the month-end procedure, the finance director undertakes a payroll control account reconciliation and investigates any differences to ensure that the payroll figures have been posted in the accounting records correctly. The company's HR department is responsible for processing starter and leavers using a joiner leaver form to notify the payroll department of the change. On receipt of the joiner leaver form, a payroll clerk updates the payroll system. An edit report is generated which records the changes made, but the report is not reviewed. 2 staff members from the HR department have been absent for some time due to the illness. As a result, the operations manager has processed 6 newly recruited temporary delivery drivers and instructed the payroll department to set up the new employees. Delivery drivers are sometimes required to work overtime, particularly in busy periods. When overtime is necessary, the operation manager has to authorize overtime in excess of 5 hours per week. Some temporary delivery drivers receive their wages in cash. The delivery driver collects the pay packet from the finance department when it is ready. The members of the staff in the finance department will ask for the delivery driver's name to check that there is a pay packet prepared, and if there is, they provide the delivery driver with their pay packet. The company has to pay employment taxes to the tax authority by the end of each month. Each month, the payroll supervisor calculates the total liability due to the tax authority, and this is then passed to the financial controller, who checks the calculations prior to the payment being made. To encourage delivery drivers to make deliveries on time, the company pays a discretionary bonus to delivery drivers on a quarterly basis. The operations manager decides on the bonus to be paid and notifies the payroll clerk in writing every quarter as to who will receive the bonus and how much will it be. As delivery drivers spend the majority of their day driving the company vehicle, they are required by law to take a 15-minute paid break in the morning and afternoon, as well as 1-hour lunch break. The company has no way of monitoring the length of these breaks as the delivery drivers are out on deliveries. Now, when I tell you read the question, you have to read it and understand it. Okay. So now we want 4 key controls, that is good controls and test of control. So let's start. Now look at this. All staff members are required to clock in and clock out, that is, swipe the card and swipe out. Swipe the card when they enter in and swipe the card when they enter out. And every card has a unique employee number. So every staff member has a unique employee number. So what happens because of this? So when you clock in, when you enter, and when you clock out, when you exit, you are paid for the exact hours that you work for. Okay, so that is the first control, and that is clock in, clock out. I told you to put the heading also, right? Clocking process. Okay, so what will you write? All staff members are issued with a sequentially numbered key card. Sequence checks and checks on the data recorded are carried out by the HR supervisor. See, data is recorded in the clocking system and the sequence check is carried out by the HR supervisor on a regular basis. So by the HR supervisor. Okay. Because of this, what happens, I told you always you have to write in the next paragraph. Don't keep the examiner guessing that, oh, because of the clocking process, what happens, we don't know. You write it in the next line. So what is that? This ensures that payroll records are complete, also that employees are paid for hours worked and that all hours are recorded. Okay. Now, how will you test as an auditor whether this control is happening properly or not? The company will tell you anything, that we are doing this, we are doing that, but is it really happening? So, testing the controls. So, what you can do, for a sample of key cards and data recorded, carry out a sequence check to identify if there is any gap in the sequence. Yes, within the clock in process and the clock out process. So, for a sample of key cards and data recorded in the clocking in system, carry out a sequence check to identify if there are any gaps in the sequence. That is the first thing. And then they have only said that the HR manager, HR supervisor carries out the sequence check on a regular basis. So you review the details of that also. So review the details of checks carried out by the HR supervisor to identify any gaps in the sequence and check that they have evidenced their review by way of signature, because they are putting a review by way of signature, right? By way of signature. Okay, so this is the first key control. Now, what is the second key control? This is the next one. The clocking in process is monitored by camera. Yes, on the entry to the distribution center. And weekly checks are carried out by the HR department, who review the video footage to ensure that no staff member clocks in for someone else. Now, this is very common and very, it is very common in companies wherein if your friend is absent, then a day prior he will give you your card and you will swipe yours also and his also, so that his pay is not compromised. But here, along with the HR supervisor carrying out the clocking in process regularly, they also have camera to see if one person is swiping only one card. Okay. And recordings are kept in date order in the HR department and log on the spreadsheet together with the name of the person who has reviewed the footage. So not only do they have the camera just to show us, but they are also reviewing the footage on a monthly basis, and the person who reviews the footage, the person who checks the footage, his signature is there as an evidence that yes, I have checked the footage. So the next control that we have is the clocking in process is monitored by a camera on entry to the distribution center and video footage is reviewed by HR every week. Now, because of this, what happens? You have to write in the next line, right? Because we don't want to keep the examiner guessing. So this will prevent staff members fraudulently clocking in for other employees, and hence employees will only be paid for the actual hours worked. Right? I didn't give the heading for this. Clocking process monitored. This is clocking process is monitored. And what will be your testing of controls? That they are monitoring the clocking process by a camera. They are keeping the recordings, right? As an auditor, you can go and check if the recordings are really there, and you can also check the signature of the person who is evidencing this, who's checking this. So for a sample of weeks, review the log of the recordings to identify who reviewed that week's footage to ensure it has been reviewed by a member of the HR department. Okay, and in the log also there has to be today's, tomorrow's, every day's recording, right? So you also check if there's a gap in some recording. So review the log for any gaps in the review process and discuss these findings with HR. Okay, so that is the monitoring of the clocking in and clock out process. Now next we have is the clocking in system is directly linked to the payroll system, and information regarding the hours worked by the staff is automatically transferred to the payroll system, and the payroll system automatically calculates the gross and net pay. And this check is also reviewed by the payroll supervisor who evidences their review. Okay, gross and net pay is automatically calculated, and a supervisor reviews this check if it is calculated correctly. So this is one more amazing control. So write down that. Third one, the payroll clock confirms the transfer of hours and calculations has been done accurately by recalculating for a sample of employees their gross to net pay. Okay, this check is also reviewed by the payroll supervisor who evidences their review. Right? And because of this, what happens means, although it is done on the machine, once more it is calculated. That means even if there's an error in the machine, a person is doing it manually on a sample basis. So this reduces the risk to occur that in automation, if there is any risk, then that will be caught. So next line, what happens because of that? This reduces the risk that errors occur in the automated transfer and calculations during the payroll processing and any errors would be identified on a timely basis to prevent salaries from being over or underpaid. Cool? Yes, third one. Now, how will you check if this control is really working properly or not? What you can do is, for a sample of months, you can review the calculation of gross to net pay, and you can check if a payroll clerk is redoing the calculation and check for his signature. So, for a sample of months, again I forgot to give the heading here. This can be payroll calculation. Okay, so for a sample of months, review the calculations of gross for a sample of months. Review the calculations of gross to net pay for evidence that the calculations have been performed, whether they have really been performed or not. Then when you perform those calculations, the payroll clerk gives his signature. So confirm the signature of the payroll clerk. So confirm the signature of the payroll supervisor as evidence that they have reviewed the report. Okay, so you can do that much. Then next one, the last one, all staff are entitled to 22-day holiday a year. Employees are paid for any holiday which has not been taken at the end of the year. That means basically, in short, you cannot take holiday at the end of the year because there's a lot of work in the company. Department managers are required to approve all holiday requests by authorizing employees' holiday forms. However, this does not always occur. So this is not a strong control, but this is a deficiency in the control. So you will not write that. Proceed forward. The payroll system is password protected and the password is changed on a monthly basis by the payroll manager using a random password generator. Yes, this is a control strength. So your heading will be payroll system password protected. Okay, so the payroll system is password protected and the payroll manager changes the password on a monthly basis using a random password generator. Okay, now what happens because of this? You have to write it in the next line. This reduces the risk of fraud by preventing unauthorized changes being made to the standing data and unauthorized access to sensitive payroll information. Yes, now how will you check if this control is really being followed or not? You can attempt to log in the payroll system using a password which is of the previous month, that is out of date, because every month you're receiving a new password. So attempt to log in using the old password and the system should reject the access. If the system rejects the access, that means the control is perfect. So attempt to log in to the payroll system using a password which is out of date. Confirm that the system has rejected access. Okay, so these are the 4 points which is now done. Yes, for 8 marks. Now without further wasting any time, click on next. Now you have to identify 6 deficiencies in the system. That means something that is wrong in the system, not working properly, deficiencies. And you have to give the recommendation on the same. That is how are you planning to solve this problem. So see, they've already given us the diagram. As I told you, the diagram is already given. If it is not given, you have to draw it from your table and you have to draw how many you need. Okay. So now we have to identify the deficiencies and give recommendations. Now one of the deficiency we had seen here, see, this one. See, the holiday thing. I said, this is not a strong control, but this is a deficiency. So you can write it down in deficiency. Department managers are required to approve all the holiday requests by authorizing employees' holiday forms. However, this does not always occur. So this is a control deficiency. So the is authorization of holiday forms. The heading can be authorization of holiday forms. Authorization of holiday forms. So department managers are required to approve all employees' holiday forms. However, this does not always occur. In the second paragraph, what will you write about the same? what happens because of this, because you have to write the deficiency and how does it affect you. So what happens because of this? This could result in employees taking unauthorized leave, which could lead to operational difficulties if there are shortages of staff in critical periods. Okay. So what as an auditor you can recommend for the same? They are not doing it. But what can your recommendation be? Every holiday that the employee takes should be approved. So employees should receive written confirmation when their holiday has been approved and should be informed that they will not be able to take holiday without this notification. Okay, then the second one. This paragraph, because the above paragraph is a strength, it's not a deficiency. So let's see this one. Once the payroll has been agreed by the payroll supervisor, the clerk provides details of the net pay due to each employee to the financial controller, who then prepares and authorizes the bank transfer to be paid to the employee's account. So now what happens is the payroll and everything is ready. So the clerk just gives the details that this is the net pay to each employee, and then the financial controller prepares the pay and even authorizes the pay. So when one person is doing too much of important things, it's very easy for him to conduct a fraud. Okay, so there should be a segregation of duties here. So your next point heading can be lack of segregation of duties. Okay, so what will you write? The financial controller prepares the bank transfers for the payroll and also authorizes these to be paid. This lack of segregation of duties increases the risk of fraud and error as the financial controller could pay themselves or certain employees more than they are due without this being detected. Okay, if there is lack of segregation of duties, then what can your recommendation for the same be? Once the bank transfers are being prepared by the financial controller, there should be somebody else sharing responsibility of making the actual payment, like you can say the finance director. So basically there should be a segregation of duties between at least two people, because when there are two people together, it's difficult to conduct a fraud because you have to kind of convince the second person. So once the bank transfer has been prepared by the financial controller, it should be passed to the finance director to be reviewed and authorized for payment. The review and authorization should be evidenced by the finance director. Okay. This is a good control, so that will not come. Next, yeah, see this para. The company's HR department is responsible for processing starters and leavers using a joiner leaver form to notify the payroll department of the change. On receipt of the joiner and leaver form, the payroll clerk updates the payroll system. That is, a new joiner has to be paid from the date of joining. Yes, and from that date onwards. And the leaver has to be paid up to the date of leaving. So everything is updated on the payroll system. An edit report is generated. Edit report means if a person has left in the between of the month, he will not be paid for the entire month, like that. So an edit report is generated which records the changes made, but this report is not reviewed. So this is a deficiency. They're preparing the edit report, but nobody is reviewing the edit report. So my heading will be edit report not reviewed. edit report not reviewed. So the payroll clerk amends the payroll and an edit report of the changes produced, but this report is not reviewed. And because of this, what will happen? As the edit report is not checked, errors made by the payroll clerk when updating the system will not be identified promptly. And this may result in less payment to the employees, less/no payment to employees. Okay, so what can be your recommendation for the same? Edit report should be reviewed at least by somebody, so at least a payroll supervisor. Yes, so the payroll supervisor or a member of the finance team should review all edit reports and agree changes made to the details on the joiners and leavers form, and any discrepancies should be investigated promptly, and the payroll system updated for any errors or omissions. And once the review has been done, the payroll supervisor can also evidence his review by signature. So that also you can write one point. I'll just write signature. Signature as evidence. Okay. Fourth. Okay, now see from here. Normally, the HR department is responsible. See here, the HR department is responsible for processing starters and leavers, but 2 staff members from the HR department are absent for some time due to illness. So they are absent from a long period of time. So because of that, the processing of starters and leavers is done by operations manager. Now, operations manager is somebody who takes care of day-to-day operations. He doesn't have the expertise for the processing of starters and lever form. So obviously he might have made some mistakes. So what will I write the heading to be as? Joiners / levers processed by operations manager. Joiners / levers processed by operations manager. Okay. So first of all, the HR department is responsible for processing joiners and levers, but due to staff illness, the operations manager has processed temporary new drivers and notified payroll. Now, because of this, what happens? The operations manager may not carry out all the required procedures for processing temporary new drivers, as the manager may not be using appropriate documentation. And this could lead to temporary employees not being set up in the payroll records correctly. So, two staff members absent, right? But others are there, no? So the others can do it because they have specialization in doing it. So all staff appointments including temporary staff should only be processed by the HR department to ensure that correct procedures are followed. This is our suggestion for the same. Fifth one. Delivery drivers are sometimes required to work overtime, particularly in busy periods where overtime is necessary. So the drivers sometimes do overtime. However, where overtime is necessary, the operation manager has to authorize overtime in excess of 5 hours per week. So only excess of 5 hours per week is authorized. Less than that is not authorized. So overtime authorization can be my heading. Heading is very important, so you give an insight to the examiner exactly which point are you writing. Okay, so this is your overtime authorization point. So only overtime in excess of 5 hours per week needs authorization by the operations manager. Okay, that means if I claim an overtime for 4 hours per week, it is not authorized. If I claim for 3 hours per week, it is not authorized. Only in excess of 5 is authorized. So this means that employees could claim to have worked up to 5 hours overtime without authorization resulting in payments being made to employees for hours not worked, because below 5 hours there is no authorization required. So every week I will say that I worked for 4 hours, I worked for 3 hours, and I will get money for that also. So payment being made for employees not worked, for hours not worked, and additional payroll cost. So what can be my recommendation for the same? I'll tell you one simple recommendation. All overtime should be authorized, be it above 5 hours, be it below 5 hours. So give that recommendation. All overtime, including that below 5 hours, should be authorized by a responsible official before processing the payroll. And once it is authorized, this authorization should be evidenced by a signature. Yes. So this authorization should be evidenced by way of signature. Okay, and then the last one. Now, some temporary delivery drivers receive their wages in cash. Now, sometimes when you have shortage of delivery drivers, you hire some temporary drivers. If I want to take my things from here to there and there are no drivers available, so what I do is I hire temporary drivers. So these temporary drivers, I don't take so much effort to put them on payroll, then calculate their pay, then pay them online and all of that. So what I do, I always give them in cash. So when the delivery drivers collect their pay packets from the finance department when it's ready, The number of staff in the finance department will ask for the delivery driver's name to check that there is a pay packet prepared, and if there is, they provide the delivery driver with the pay packet. So imagine my pay is ready, I go to take my payment, there is no other authorization required. They just ask me my name, they see if that pay packet is there, and they directly pay. They don't even see my ID, they don't even confirm if I am the same person. So if anybody can come and take my name and take my pay. So that is a deficiency. So what can be my heading? What can be my heading? Pay packet, temporary drivers pay packet. Right? And what about that? Where cash wages are paid, the temporary drivers is only required to provide their name to collect their pay packet. Okay, so what happens because of that? Payment of wages without proof of identity or signature. They're not even taking the signature. Increases the risk that wages, one second. Okay, so payment of wages without proof of identity or signature increases the risk that wages could be paid to incorrect employees either in error or due to fraud. Okay, so what will your recommendation be? Any delivery driver receiving the cash wage should provide a form of identification, their signature, their photograph, something, yeah, because nobody else should claim your pay. So all drivers collecting cash packets should provide a form of identification to the finance staff member before the pay packet is handed to them. And after you get the money, signature should also be taken. The driver should also be required to sign for their pay packet. So these are the 6 deficiencies and recommendations. Then next, substantive procedures we studied yesterday only. So describe substantive procedures the auditor should perform on what? Payroll expense. Yes. Substantive procedures are performed to get a proof of the same. Okay. The first I'll write the heading. Substantive procedures on payroll. We have already read the question, so we can directly start. And you can select this. So for every enter you press, automatically a point will come. So they've asked us for 6 marks, so you can give 6 to 7 points. So what substantive procedures you can give for payroll? First of all, cast a sample of payroll records. Cast a sample of payroll records to confirm completeness. And accuracy, and agree the total wages and salaries expense for the payroll system to the trial balance. Okay, that is the first one. Then the gross and net pay is there. So recalculate the gross and net pay for a sample of employees to check that it is correct. So recalculate the gross and net pay figures for a sample of employees and agree to the payroll records. Okay, second point is done. Then third point. Whatever is the calculation of net pay, you have to make sure that that is the actual payment that is made to the employee. So for that also you require a proof. For a sample of wage payments, agree the total net pay for the payroll records to the bank transfer listing and to the cash book. Okay, then next, there should also be an analytical procedure, that is comparing current year payroll to the last year payroll to check for any significant differences. So compare the total payroll figure this year to the prior year identify any significant differences and discuss with the management. Okay, 1, 2, 3, 4, 5 and 6. Two more we require. Now they are allowed to do overtime. Yes, so calculate overtime cost as per the percentage of total wages and see and compare the overtime with the previous year. Yes, then you can also recalculate the wages for a sample of employees, check their clock in and clock out, and make sure that they're paid for the exact hours they work for. So, agree a sample of individual wages and salaries for the payroll to records of hours worked for the clocking in system. Then next, sample of joiners and leavers, they have to pay accordingly. Yes, so what happens is for the joiner, their first pay has to be perfect, because if they're joining from between or if they're joining after 10 days, they should be paid only for that. And for leavers, their last pay needs to be proper. So you need to make sure that for joiners and leavers, for joiners their first pay and for leavers their last pay needs to be calculated accurately depending on how many days in a month they have worked for. So select a sample of joiners or leavers, agree their start or leaving date to supporting documentation, to confirm whether correct deductions for this year have been made to the payroll. Okay, so these are the substantive procedures on payroll for 6 marks. So that completes your question 1. Okay, that completes your question 1, part 1, 2 and 3. Now we'll take a break of 5 minutes before we proceed to the question 2. Okay, so the next one that we have, the next question that we have, describe the preconditions of an audit. Now, this is also an independent question, so you don't have to read the question to answer it. But this is the question. So let's answer the preconditions of audit. So preconditions required for an audit. And then again select this. So IIC 210, agreeing the terms of audit engagement, states that auditor should only accept or continue an existing audit engagement if the preconditions are present. And what are the preconditions required for an audit? The first one is preparing the financial statements in accordance with the applicable financial reporting framework. Then second, internal control is necessary. So internal control necessary for the preparation of the financial statements to be free from material misstatement whether due to fraud or error. Okay, and next you have to provide the auditor with access to all the information. So providing the auditor with access to information relevant for the audit and access to staff within the entity to obtain audit evidence. Okay, so these are the preconditions of the audit. 3 points for 3 marks. Okay, now the next. 7 audit risk and 7 responses. For that we have to definitely read the question. So let's read the question first. The scenario relates to 3 requirements. 1 requirement is already done. This is B and next is coming. It is 1 July 20x5. You are an audit supervisor with Woodward and Company and you are in the process of planning the audit of Corey Appliances Company, a company which sells domestic electrical appliances such as fridge, freezers, TVs and washing machines. The company's year end is 31 August 20x5 and forecast revenue for the year is 12.2 million. Total assets are 6.8 and profit before taxes 2.8. The audit manager held a meeting with the finance director and the notes from the meeting are provided below. Notes from meeting the finance director. The company operates nationwide with 20 branches located across the country and sells goods to members of the public and to retailers. The company has a returns policy which allows a customer to return goods within 28 days of purchase if they are not satisfied with the product. Historically, 5% of customers return goods within the return period. The company also provides a 6-month warranty on its products, which requires Korea Appliances Company to repair any defects at its own cost which arise within the warranty period. It is anticipated that the warranty period in the draft financial statements will be lower than the prior year, as the directors are confident the products sold by the company are built to a very high standard. The company is based in Europe and its main supplier of appliances is based in Asia. Goods are shipped to the company's central warehouse by sea and are usually in transit for up to 1 month. Korea Appliances Company has responsibility for goods in transit from the point of dispatch by the supplier. The central warehouse and all 20 branches will be carrying out a full year-end inventory count on 31 August 2025, and it is expected that the value of inventory in Korea Appliances Company's financial statements will be $0.95 million. Over the last 6 months, the finance director has noticed that the company's receivable collection period is now an average of 55 days, whereas the company's target is 42 days. The credit controller has informed the finance director that she is confident that all receivables will eventually pay, as increases in receivable collection period are starting to become common in the industry. The finance director believes it is unlikely that any increase in the allowances for receivables will be necessary at the year end as compared to the prior year. In June 2025, a fraud was uncovered in the finance department. A payables ledger supervisor had diverted funds from the company's bank account using a fictitious supplier on the payables ledger. The employee was immediately dismissed, and the value of the fraud will be recognized as an expense in the statement of P&L. Since the dismissal of the supervisor, purchase invoices have not been recorded in the payables ledger, and it is unlikely that this backlog of invoices will be cleared by the year end. During the year, the company purchased and installed a new automated dispatch system for its central warehouse. The cost of the dispatch system was $0.9 million and has been recognized as an addition to property, plant, and equipment. These capitalized costs include the purchase price of $0.6 million, installation cost of $0.2 million, and staff training cost of $0.1 million. Due to the cost incurred in purchasing the new dispatch system and increase in the receivable collection period, the company's overdraft facility has increased significantly and at one point went over the agreed limit of $0.7 million in early June 2025. The bank has expressed concern about the way the company is operating its bank overdraft, and decision will be made in November 2025 as to whether the bank will continue to provide this overdraft facility which the company is dependent on. The auditor's report is due to be signed in October 2025. Now, we have already done 2 questions on audit risk and auditor's responses. I will just write down the risk. You have to write down the responses, but I will discuss the responses, okay? So 7 risks and responses. So let's see the risk. Now, if you see this, the company has a returns policy for which allows the customer to return goods within 28 days of purchase if they are not satisfied with the product. So that is the first audit risk. But what is the risk in that situation? If the company has not correctly accounted for the refund liability, revenue will be overstated. That is the risk. So first of all, you will write the situation. So that is regarding the returns policy. Clear? Now write the point. Write the situation first. So the company has a returns policy allowing a customer to return goods within 28 days of purchase. If they are dissatisfied with the product. Okay, this is the situation. Now, because of the situation, what is the audit risk? So, because of the situation, what will happen? If the company has not correctly accounted for the refund liability, revenue will be overstated and refund liability understated. This is the audit risk. Now, what is the auditor's response on the situation? You inquire with the finance director how he has applied the refund policy. So, inquire with the finance director how the returns policy has been applied at the year end and review the assumptions, like if any assumptions that they have undertaken. Okay, so this is the returns policy. Now the second one. Second one, you have to write the response, okay? The company also provides a 6 months warranty period on its products which requires Corley Appliances company to repair any defects at its own cost which arises within the warranty period. So there's a 6-month warranty period. It is anticipated that the warranty provision in the draft financial statement will be lower than the prior year, as the directors are confident that the products sold by the company are built at very high standard. So they are reducing the warranty provision. But the catch here is that the directors are confident that the products sold are of a very high standard. But the company does not make the product at all. Yes? The company is not making the product only. If you read here, they're getting it and selling it. They're not making the product. So how can they be so confident about the product? And which in turn, how can they reduce the warranty provision? So that is absolutely wrong and it's an audit risk. So the heading will be warranty provision. Yes. And you write the situation first. The company provides a 6-month warranty on its products which require defects to be repaired wholly appliances company's own cost. The directors have reduced this provision during the year on the grounds that they feel the products are of a very high standard, right? This is the situation. Now, because of this, what will happen? First of all, the company does not manufacture the goods, they only sell them. So the company does not manufacture, they only sell. Okay, and therefore this is not a reasonable reason for reduction of warranty provision. So what can your response be as an auditor? I told you you have to write the response on your own. So as an auditor, what you will do, you will review the calculation of the warranty provision by the company for the reasonableness of the claims used by the company to reduce the warranty provision, and review the assumptions and tell the company that whatever you're doing is wrong. Okay, so that is the response. Then the third one. What is the third one? The company is based in Europe and its main supplier of appliances is based in Asia. So the products come from Asia to Europe. Goods are shipped to the company's central warehouse by sea and are usually in transit for up to 1 month. So whenever the products are in transit for up to 1 month or more or less, whatever, whenever they are in transit, there's always a problem of cutoff. Order I gave today, I received the goods next month. So is it the goods of this month or next month? That cutoff problem is always there. So your heading will be inventory cutoff. And first you will write the situation and then you will write what happens because of that situation. So the situation is that the company does not manufacture the goods. The company does not manufacture the goods, but they purchase the goods from its main supplier in Asia and has the responsibility for goods at the point of dispatch. The goods are in transit for up to a month. Okay, what happens because of this? Because of this problem, what happens? What is the audit risk? There is a risk that the cutoff purchases may not be accurate, as they may not correctly recognize the goods from the point of dispatch. And due to this, what happens? The inventory and trade payables are understated at the year end. Okay, so what will be your response for the same? The auditor should discuss with the management what is the cutoff point. From till what date you should consider the inventory as of this month, and from what date you should consider it from next month. So basically discuss with the management the point at which the inventory is recorded, till what time it is this month and till what time it is next month. Okay. Then fourth one. Next, the central warehouse and all the 20 branches will be carrying out a full year inventory count on 31 August 2025, and it is expected that the value of the inventory in Korea Appliance Company's financial statement will be $0.95 million. Now imagine the central warehouse plus 20 branches. The total 21 branches are carrying inventory count on one day. 21 branches total. 20 plus central warehouse. Will the auditor be able to attend the inventory count at all the branches? No, it's not possible. So that is the next audit risk. Inventory count at all branches. So then write down the situation. The company's central warehouse and all 20 branches will be carrying out an inventory count at the year end on 31 August 2025. Okay, now what will be the problem because of this? It is unlikely that the auditor will be able to attend all sites, which increases detection risk. What will be your response to the theme? You can select 5. So today let 5 branches carry on the thing, then 5 more, then 5 more. So at a single day from the last week of August you can start 26, 27, 28, 29, 30, 31st. 5 you can take as a group, and then like that you can give suggestions as an auditor, right? So that can be your suggestion. Then 5th, over the last 6 months, the finance director has noticed that the company's receivable collection period is now an average of 55 days, whereas the company's target is 42 days. So the collection period has increased. That means the company is taking more time to get its money. So the company is losing on time value of money. Yes, and because of this, some receivables even may not be recovered, which will lead to bad debts. So your next heading can be receivable collection period. So over the last 6 months, the receivables collection period has increased from 42 to 55 days. What will happen because of that? Some receivables may not be recoverable and if additional allowance for receivables is not included in the financial statements, receivables will be overstated and allowance will be understated. So what will you do because of this? Perform extended post-year-end cash testing. Look for receivables. Make an additional team. Try to collect the receivables as soon as possible within 42 days. Because the company's target is 42 days. Then sixth, see the next paragraph. In June 25, a fraud was uncovered in the finance department. A payables ledger supervisor had diverted funds from the company's bank account using a fictitious supplier on the payables ledger. The employee was immediately dismissed and the value of the fraud will be recognized as an expense in the statement of profit or loss. Since the dismissal of the supervisor, purchase invoices have not been recorded in the payables ledger and it is unlikely that this backlog of invoices will be cleared by the year end. So, payables ledger supervisor fraud. Ledger supervisor fraud. Okay. So the payables ledger supervisor was dismissed. Write the situation. In June 20x5 due to a fraud. The value of this fraud has been recognized as an expense in the draft statement of P&L. So what will be the audit risk in this? The fraud is uncovered, right? But the audit risk is that if additional frauds are uncovered by him, they are not yet discovered. There might be many more to it. So if additional frauds committed by the payables ledger supervisor, not discovered, this could result in expenses being understated and payables being overstated. And what can be your response for the same? Discuss with the finance director what fraud was conducted, what measures did they use to uncover the fraud, what is something more that they can do. If you remember the similar type of question we had solved on day 1 in audit risk, day 2 of the revision, when we did audit risks and auditors responses, in that we solved this particular point. And 7th one, now see this point also. Since the dismissal of the supervisor, purchase invoices have not been recorded only in the ledger, and it is unlikely that the backlog will be cleared at the year end. So if the backlog is not cleared, the records will not be complete, and if records are not complete, then you cannot make the financial statement, right? So next one is backlog of invoices. Backlog of invoices. Okay. So since the dismissal of the payables ledger supervisor, purchase invoices have yet to be logged onto the payables ledger. Because of that, what will happen? There is a risk that the payables and purchases at the year end will be understated if these invoices are not logged onto the payables ledger before it is closed down for the year. So what will be your response for this? As an auditor, what you can do is you can review the unprocessed invoice file at the year end, and what you can do to identify any invoices which relate to the supply of pre-year end goods and ensure they have been properly accrued. Then you can discuss with the finance director the approach, right? You can discuss with the finance director the approach that can be used to resolve the issue of any unprocessed purchase invoices. With that, you will have an idea of how to do it, because you cannot keep it incomplete, right? At some point you have to solve it, and discuss the accounting treatment with the finance director. So that will be your auditor's response. Okay, so let's proceed. Now the next is professional skepticism. We know the definition of professional skepticism, so define the term professional skepticism is there. We've already written down the first day that I showed you this paper. 2 examples where the auditor should apply professional skepticism. Now from this question you have to search 2 situations where the auditor can apply professional skepticism. So I'm giving you 2 minutes to think about it. I'll give you the heading and you write down, okay? Before that, think about the heading. So, the first place where the auditor should apply professional skepticism is on revenue recognition. Because there's a problem in that. And second is in warranty provision. Is that clear? So these are the two examples where the auditor should apply a professional skepticism, that is a questioning mind, questioning attitude, and being alert to conditions which may indicate possible misstatement due to fraud and error. So this completes your second question of the exam, which is for 20 marks. Now the third question is also 20 marks because we've already done a 30 marker. So first questions we had deficiencies, controls and test of control. Second question we had audit risks and auditors' responses. Let's see what the third question has. Before that, we'll take a break of 5 minutes. The next we have is the next question. Substantive procedures. Now see, as I told you, day 1 I told you that the 3 common questions in section P is audit risks and auditor's response, deficiencies, controls and test of controls, and substantive procedures. First question we saw what came? Deficiencies. Second question we saw what came? Audit procedures. Third question you're seeing in front of you, what is it? Substantive procedures. Now can you understand the importance of these questions? That is why on the day 1 I told you, please attend the revision. It's very important. So I said section, whatever is common, I will cover it all. So this is the last part, substantive procedures. So before that, I want you to read VEGA-DOG, because substantive procedures on VEGA-DOG, that is VEGO-DOG, that is inventory valuation. So before that, you have to read the entire question. So let's read the question first. It is 1 July 20x5. Perfect Company manufactures and sells a variety of food for dogs and cats. Your firm, Kirano and Company, has audited the company for a number of years. You're about to commence the final audit for the year ended 31 March 20x5, and the draft financial statements show profit before tax of 23.1 million and total assets of 99.2 million. Then the first one, VEGO-DOG. Perfect Company launched a new brand of vegan dog food, VEGO-DOG, in December 20x4. But sales have been lower than expected, and the directors are considering a discounted sales price. VEGO-DOG products are valued using a standard costing method, and the standard cost comprises raw materials, labor cost, and production overheads. As at 31 March 20x5, VEGO-DOG products with a standard cost of $2.4 million were included as finished goods inventory. Then receivables of Elha Company. One of the Perfect Company's major customers, Elha Company, operates a chain of pet stores with 23 stores across the country. There have been reports in the press for several months that Elha Company sales and profits have been falling, and in March 20x5, Elha Company announced that 11 of its stores were to close in May 20x5. As of 31 March 20x5, Perfect Company's trade receivables included $2.6 million outstanding from Elha Company, and no allowance has been included for this balance at the year end. Contamination of legal claims. On 25th Feb 20x5, it was discovered that a batch of canned cat food had been contaminated with insecticide, which could be harmful to cats. This batch has been dispatched in November 20x5 to 247 retail stores. By 31 March 20x5, Perfect Company had received legal claims totaling $1.9 million from customers whose cats had eaten the contaminated food. Now the first is substantive procedures on inventory valuation. So once again, read the inventory valuation. It's for 6 marks, so you need to have at least 6 good points. For any question, if the table is not given, you can make the table like this. You can write it. If you don't want it, you can delete the table. So okay. So let's write about inventory valuation. The first one is obtain and cast. Yes. Obtain and cast the inventory listing of VEGO-DOG products and agree the total cost of 2.4 million to inventory records. That's the first point. Then second, agree the quantity of products. So agree the quantity of Vagodoc products shown as held at the year end to the year end inventory count records. Substantive procedures are conducted to have a proof of the same. Then recalculation is also a part of substantive procedures. So recalculate the cost calculations to confirm that the quantity multiplied by the standard cost is $2.4 million. Then next, what you can do is you can compare sales prices over time to see what is the graph of change. So compare sales prices over time to establish if the price has been reduced because of falling demand to determine whether an allowance is required. Then sales units budgeted and actual, that also you can compare. So compare actual sales units per month to budgeted sales per month from before and after the year end to establish how much lower actual sales than expected actual sales are than expected and discuss with the management. And last, select a sample from the inventory and review the post year-end sales invoice testing to see if any adjustment is required. So select a sample of items included in inventory of Vagodoc and review post year-end sales invoices to ascertain if net realizable value that is NRV, is above cost and if adjustment is required. Okay, so these are the substantive procedures on inventory valuation. Next, substantive procedures in relation to receivables. Now, this receivables were already studied in our revision on substantive procedures yesterday. So, same you can write, but related to the situation. So, substantive procedures on receivables due from LHA. Okay, so what you can write, for how many marks it is? For 4 marks. You can write 4 to 5 points. Same the receivables that we studied in the revision class. So review correspondence with LHA company to establish if there was a discussion about payment difficulties and whether LHA company intends to fully settle the outstanding amount. Okay, this is one thing. Then, what is the age of the outstanding debt? Is it very old or is it recent? So, review the age of outstanding debt and discuss the circumstances with the credit controller to establish if it has exceeded the agreed credit terms. This is just what we have studied, no explanations. And consider if allowance is required. Then next, you can review the post-year-end receipts, you can inspect the board meetings, and you can have a discussion with the management. All 3 points. So, review post-year-end meetings. Meetings with the management, review post-year-end receipts to establish how much debt was recovered by the audit completion date. And how much is outstanding. Then next, board minutes, review or inspect board minutes to identify whether there are any significant concerns in relation to payments. 4 points are done, but you can write one more. That is discussion with the management. So discuss with management. Why no allowance has been made in respect of this debt, and assess the justification. That is the second one on receivables from Ella. Then next is on legal claim. So same way you write on legal claim. Substantive procedures on legal claims. So see the legal claim. First of all, get the details of the claim, like what is the legal claim and what is the amount of the claim. So the first one, review customer correspondence to establish the details of the claims and the amount being claimed. Second one, correspondence with the lawyers regarding the likely outcome of the claim. This is what we had already studied yesterday. So review correspondence with lawyers but this is with the client's permission, because you cannot direct contact the lawyers. So with the client's permission, to establish the likely outcome of the customer claims. Okay, then next, what if the claim becomes successful, then what will be the potential payment of future claims, amount of future claims. So that also you discuss with the lawyers. So discuss with lawyers the likelihood and the amount of potential future claims. And next, what you will do, review the post-year-end payments to ensure that if there were any claims, then had we made the payment. So I will just write post-year-end payments. You complete that point. Okay. So this is, no, but we have finished only 4 points. It's for 5 marks. So review post-year-end books for any damage settlements and compare with any amount of losses. So I will write compare with amount of losses. Okay, so that is with legal claim. And then the last part of the mock, they've added this. The final audit is now nearing completion. The audit team is satisfied that the legal claims received to date have been appropriately reflected in the financial statements. However, Perfect Company's lawyer has advised you that it is possible that significant additional legal claims may be made by customers in future in respect of the contamination. The audit engagement partner has confirmed that this is a contingent liability that requires disclosure. The finance director has agreed to disclose some detail of the potential claims in the financial statement, but the audit team is yet to confirm the adequacy of these disclosures. Discuss the issue and describe the impact on the auditor's report of Perfect Company of both adequate and inadequate disclosures of the contingent liability. So, what is this issue and impact on audit report? As I told you, we had done a similar question yesterday. So, you have to discuss the issue. Then if it has an adequate disclosure, then how will it impact the auditor's report? And if there is inadequate disclosure of this matter, how will it impact the auditor's report? So first of all, describe the issue. This is regarding the claims that it should be disclosed as a contingent liability. So if you have an adequate disclosure, there will be an unmodified opinion. Yes, because you have already disclosed it. Yes, but first you will discuss the issue, then you will discuss the materiality of the issue. Then if you have adequately disclosed it, then there is no problem. But if you have inadequately not disclosed it, then the matter will be material. But is it material and pervasive? No, it will be material and not pervasive. Means what? It will affect the financial statement in that area, but the remaining will be perfect. That is material but not pervasive. That means this matter will affect only that area of the financial statement, but the remaining financial statement will be perfect. So this is same like we solved yesterday. You discuss the issue, then you discuss the materiality of it, then give an adequate disclosure. Yes, if they have disclosed properly, then it's an unmodified opinion. And if the disclosure is not there, then it will be modified. It's material and not pervasive, so it will be qualified opinion. That is except for opinion. Okay, so that is with the last part. Now we have completed the entire mock. All the questions are complete. You can end the exam. But before we end the exam and end this session, this beautiful session of AA revision in English, I would like to tell you this paper was a proof that the three most common questions in the exam are audit risks and auditors' responses, deficiencies, controls and test of controls, and substantive procedures. So it's my humble request to everybody watching that please do not ignore those three questions. And please do not ignore the MCQs. A lot of MCQ practice is available here. You just go on the quizzes and you have so many quizzes. Do the MCQ practice from you. So with that, I end my today's session. It was very nice teaching you guys the concepts, solving papers with you. I hope this session is very, very useful to you. And I wish you all the best for your exams in December. May you be successful with flying colors, and may this revision session help you a lot. Thank you so much guys for attending it. Thank you so much. All the best.